So the market finally broke down the propping price action. The propping price action still confused the direction of the market intraday. You know, after the Fed minutes, it did this, and then rolled over. And so a lot of confusion in the chop. Another choppy day. We have this propping here. Market tried to prop here, and at the last minute, boom, it went down. Market internals were finally weak, and everything's in line. So we're due for a pullback. We're due for a correction. It's normal and healthy. The market can actually go higher in the long run if it does pull back than if it just sits here at the highs. And so the market, I've never seen a market spend so much time trying to push prices higher. It's buying these dips with the same type of tenacity that it would if the market had been down 10 or 20%, or during the pandemic. They're just buying this like it's some big, huge dip buying area when it's tightly wound at all-time highs. And so we need a pullback here. I think we're going to get one. It'd be great to see a big pullback, 10, 15, 20%. We'll see. It's been tough to trade it because it's been so choppy. It's been so tightly wound. They've tried to drive the market higher and higher and higher without ever having a pullback. So let's go over the trades on the day. Once again, commodity markets lead the way with just soybeans. Soybeans day trader 3 plus 387.50 per contract. And RBOB, there were no trades. Natural gas, no trades. Crude oil, no trades except gap fill and reversed. So no real trades in the energy. Same thing overall in the metals. Copper traded, but silver and gold did not trade today. And then we had the euro minus 143.75. Exhaust in reverse. Captured that sell-off, trying to make a dip buying opportunity, minus 12.75. And so just overall choppy. Let's look at the stock index strategies. Not a lot of trades in the commodities though. None of our energy or metals portfolio strategies traded in the energies or metals, just soybeans. And then we have the counter trend strategies in the stock indexes that did well. Mirror plus 675, Gap Fill Master plus 175, Tick Count Trend plus 100. This did well. 1, 2, 3. You see 3 shorts here and then 1 long. And then you had 60-minute breakout rolled over minus 1,025. Adaptive moving average plus 1125. Night trader minus 1525. And then we had ES2. Night trader VSD minus 1525. Tick fader, a counter trend strategy that did well, plus 375. VSD long only minus 87.50. Gap continuation in reverse minus 1,025. This one failed us once again. Didn't take the trade on Monday. Took all the wrong trades yesterday and today. But you can see on a 1-minute chart just how choppy this market is. Very confusing. When you look at this intraday, it becomes clear. If you look in hindsight, it's clear that it sold off from this point, and you had an opportunity for a 48-point sell-off. But still, it was pretty choppy. It looked like it would bounce here, then it looked like it would bounce here, and then a sharp sell-off at the very end. Broke down 4,400 in the E-mini S&P. And let's look at the NASDAQ strategies now. NASDAQ, we have no trades in this workspace except QS3, which was plus 875. And then in Q2, 60-minute breakout A, minus 525. 60-minute breakout B, minus 1425. VSD long short did well, plus 2980. VSD long only, plus 200. EVP1, minus 1025 on this trade. And Viper 2008, plus 775. Nice trade there. And those are the trades on the day. Just overall a choppy stock index day. The gap continuation reversal hurt us the most, and it put us down in the 200K and 50K portfolio. This gap continuation in reverse, as well as in the 200K portfolio, night trader and 60-minute breakout. These were the strategies that hurt us the most. Those 3 strategies were down 3,500, but the 200K was down almost 2,000, while the 50K was down almost 1,000 per unit today. Confusing signals because the market looks like it's postured to go higher, but then it sells off at the last minute. So it's a bit of a stealth sell-off that we were due, but we've been due this sell-off for a long time, and so trying to call a top you could have called the top for a very long time, and I think we're going to get some more selling. And so good to see the sell-off. Would like to see further selling. Would be great to see a 10, 15, 20% pullback, because that's what the market needs. That's what the market is due, in my opinion. So the Fed balance sheet, we had FOMC minutes. The Fed balance sheet will be tapered. They'll start tapering, printing less money basically than they have been in the past. So the market will probably throw a taper tantrum, where if the Fed stops printing as much money or stops printing money altogether, the market could fall apart. And so that just tells you how this market is not built on solid ground anyway, because it needs constant the printing presses to constantly be running at the Federal Reserve for this market to go up. Any hint that the Federal Reserve will slow down its money printing operation or withdraw or lower or reduce its balance sheet, this market is likely to have some flash crashes in the future.